Imagine saving diligently for decades, only to have your security net ripped away without warning. That's the nightmare facing hundreds of Scottish pensioners who invested in a funeral plan, now worthless after the insurer abruptly pulled the plug. They feel utterly robbed, and with good reason. For 25 years, these individuals poured their hard-earned money into Maiden LifeFörsäkrings Family Protection Plan, FPP, a life insurance product offered through credit unions. This plan, designed to cover funeral costs and ease the burden on their families, was launched in 1999 and discontinued for new customers in 2009. But now, without any compensation, the entire program is ending on December 1st, leaving policyholders with nothing. Mutual, which manages the policy, stated no payout will be made due to Maiden Life exiting the market. Decades of careful saving simply vanished. This sudden termination has erased decades of careful financial preparation for pensioners, who have branded the move an injustice. We've been treated like we're nothing. One 75-year-old grandmother, Mary O'Neill, says she's lost £8,000 in funeral cover and is absolutely disgusted. She and her family are horrified at the situation. "I'm raging at what they've done. I feel as though we've been robbed," she exclaimed. "They're off with our money and told us we're not getting it back. How can that be right? Where has the money gone?" Mary explained that her late husband, a founding member of the credit union, helped her take out the policy 25 years ago. When he passed away, a portion of the policy's value contributed to his funeral expenses. "He would be appalled if he knew what was going on," she added. "My husband and I were both people who would be proud to pay for our funerals and not asked our children for anything. That money is gone now." Mary, a mother of 3 and grandmother of 5, says many older people she knows are losing sleep over how they will afford their end-of-life costs. They don't care what they do to vulnerable people. Because we're pensioners, they probably think we won't be there for that long. They treat us like we don't exist. She's now urging the government to intervene and assist the affected families. "I'm hoping the powers that be will help us. I'm sure the other members would feel the same way," she said. "It's just awful. How would they like it if it were their mum and dad? Somebody needs to do something." Maiden Life leaves the UK market. Maiden Life, the UK branch of Sweden-based Maiden LifeFörsäkrings AB, took over as the insurer of the FPP in 2022 on a 3-year contract. But in May 2024, Maiden Life informed Mutual that its parent company was pulling all business from the UK. This meant the FPP's coverage would end in May 2025. According to Maiden Life, the termination date was extended multiple times to allow Mutual to find another insurer. A final deadline of November 30th was set, but no alternative insurer was found. They've walked away, they couldn't care less. Anne McCauley, another 75-year-old grandmother, is equally furious and fearful about leaving costs to her family. Since 2000, she's paid around £5,000 into the plan, specifically to spare her 2 sons the burden of funeral expenses. "I didn't want to leave the financial worry to them, that's why I took it out. We paid into this for years, now it's become evident that there is a huge problem," she said. "It's come as a huge shock." Anne attended several tense meetings at Dalmuir Credit Union as the situation unfolded. The common feeling is that people feel utterly let down. "You pay into this policy for years, and we're not even getting any compensation." And this is the part most people miss. And also revealed that many customers were shocked to discover the plan excluded anyone over 80, meaning some of the oldest members were paying into a policy that became worthless. "We've been left with nothing. There's no compensation." There was talk from about May onward when Mutual were supposed to be going away, looking at alternatives that might come up, but they didn't. They were left free to go, "Oh well, there's nothing we can do about it," Anne explained. She now fears she's too old to find affordable cover elsewhere. "Who's going to take you on at a reasonable cost now? There's nothing out here. We feel abandoned." They've just walked away, and they couldn't care less how it'll pan out. Stuart Boyd, the manager of Dumbarton Credit Union, received an email in March notifying them of Mutual's plan to terminate the FPP. The insurance company stated they would be looking at alternative products, but Stuart points out a critical flaw: none of the training material we received states there's a 30-day term clause on the policy. The insurer didn't make it clear to us. They say you pay your premium, and we cover you for that month, at a month's notice. We were really shocked. He also mentioned that the insurer first notified them of closing the books on the policy back in 2009, although existing members could continue. That was 16 years ago. As far as we are concerned, they knew this wasn't viable at that point in time. They never did anything to ensure the sustainability of it. In the wake of the plan's collapse, Stuart has witnessed the devastation firsthand. We've had a member, terminally ill, who asked, "So, it'll be okay if I die before November 30th, my family will be covered." The gravity of it is that people feel as if they don't die before then, they've lost their money. He is now calling for accountability. We're calling for the insurer to be held accountable, for them to provide funding for vulnerable members, and for the government to step in. People could be left empty-handed. MSP Paul Sweeney echoes these concerns, stating that many policyholders are at risk of being left empty-handed after paying into the plan for over 25 years. Sweeney wrote to the Financial Conduct Authority, FCA, at the end of last month, highlighting that constituents have been left desperately scrambling for new policies. An estimated 200 people in West Dunbartonshire have been impacted. Douglas McAllister, the constituency's MP, has also raised the issue with the FCA and is working with ministers to investigate alternatives and push for compensation. "I want to express my outrage and share the anger of my constituents across West Dunbartonshire, members of credit unions who have been paying into an FPP for decades," he said. Many have paid in thousands, some over £10,000 across 3 decades, and to be served with the news that these policies will be terminated is absolutely shocking. These are elderly and vulnerable constituents who will be left with no cover whatsoever. It's an absolutely disgraceful decision. At First Minister's questions on October 30th, John Swinney expressed his sympathy for those affected and confirmed he would make a direct representation to the FCA, along with the Credit Union Working Group. The First Minister stated, "Credit unions provide an essential foundation in our society, particularly for people who are on low incomes and have low savings levels. It is important that financial security is available to them." Maiden Life offered the following comment: "In our dealings with C Mutual, the interests of their clients and policyholders have been foremost in our plans. As part of closing our life business, we ensured we gave C Mutual considerable notice to enable them to inform and provide their customers with alternative arrangements." But here's where it gets controversial. While Maiden Life claims they provided sufficient notice, the credit unions themselves argue they weren't adequately informed about the termination clause or the long-term viability of the policy. This raises a crucial question: who is ultimately responsible for ensuring policyholders understand the risks involved, and what level of due diligence should be expected from insurers and intermediaries? What do you think? Should Maiden Life be held more accountable? Is the government doing enough to protect vulnerable pensioners in situations like this? Share your thoughts and opinions in the comments below.